In Washington news, both parties hinting at renewed talks on the fiscal cliff, the acknowledgement of open lines of communication passed for encouraging news. A new survey by Potomac Research Group finds more than 60% of leading investment professionals predict a sharp stock decline in the market if the government fails to come up with a deal. A sharp decline is in this case is defined as a more than 10% drop in the Dow. The group polled hedge fund, pension fund, and money market managers. 56% of those surveyed foresee a deal to avoid the cliff by year end. 44% predict failure in the ongoing negotiations. As for corporate America and the fiscal cliff, through yesterday's close, there have now been 170 announcements of special dividends and accelerations from Russell 3000 companies. These special dividends and accelerations are valued at more than $30.1 billion. Among the latest names, McGraw-Hill. The company says it will pay a special dividend of $2.50 a share before year end and drop its previously announced plan to buy back up to $200 million more of stock this year.
Yeah, so they're doing the dividends instead of stock. But I wonder what this is going to mean next year, just in terms of what the government actually takes in and these higher revenues they're expecting from dividends, because everybody's paid their dividends this year, so they're not going to be paying them next year.
This is a major issue, right? Because what's going to happen is that money's, I mean, we have two great economists on set. We'll have to ask them that question. But that money will get annualized. So the 30 in the GDP accounts is going to be 120.
What?
They're going to multiply it by 4 on the dividend income, because that's it's quarter to quarter change at an annualized rate.
Right.
So it's times 4.
Okay.
Okay.
It's a special dividend.
So it's going to be 120 billion. There's some, what we'll talk about, I'm sure in a minute, is the marginal propensity of those people who get it to consume it.
Yeah, let's ask them now.
To do now?
Yeah.
Those are screwy. I mean, that's why everything,
that I say is nuts.
Seasonal adjustments and all that things are,
right.
You can almost get any kind of info you want out of a lot of, when you're annualizing
You can, and when we talk about the jobs report, seasonal adjustments are going to be a huge factor relative to Sandy.
But Bob and Michelle are here, and my biggest question is, if all these companies are pulling the dividends forward for this year, a lot of them have already said we're taking all 4 quarters for next year and paying them now so you can pay lower taxes on it. The U.S. government thinks it's going to be taking an X amount based on what they would normally get for dividends plus whatever the higher rate is going to be. It's going to drop substantially, correct?
Well, you're going to get leads and lags in the revenues, right? You're going to get a lead into this year. You're going to get a lag next year. I mean, it's pretty obvious how this works. In terms of tax planning, let's hope that they really know how to plan and they know to take account of this. But, very often governments kind of stupidly or for political purposes, argue that, oh, look how great this is working. We're doing great. And then when there's a shortfall, it's like, oh, wow, how did that happen? It's like beyond our control. So I hope we don't go that route. But, I'm sorry, this administration has been very big on these kinds of things, on basically distorting what's going on. And this current thing about the mandate really bothers me. And so I wouldn't have high hopes they're going to take the high road for the forecast mandate for next year.
I think the challenge is what Bob said, being forward-looking and trying to plan in advance. We've seen that over and over again. There's big challenges in that, not just because of the challenge in terms of getting all the information, but also in terms of trying to, make sure the budget numbers look good and they're favorable, and you never really want to take that hit. So you always want to kind of pull forward as much revenue.
And I don't know how many assumptions you can make, but when you are promising people, or when you have a tax policy that changes every 6 months or a year and you don't know what's coming, obviously the lead story in the Wall Street Journal, or one of the stories at the front page of the Wall Street Journal, is about how people, the charitable giving, they're doing big donations this year, and in some cases people are even paying their mortgage in advance so that they can make sure they get the mortgage deduction.
For some reason, some people think that money is better left in the private sector. I don't know. Companies seem to think that. People giving to charity it just seems like a better place to leave it. I mean, people are very resistant to giving money to people that they think are going to waste it, aren't they?
Well, but and there's a big problem with all of this because we have a housing sector that's just now starting to have a real recovery going,
right.
And now they're talking about taking away the mortgage interest deduction. Does this make any sense to anybody? The housing recovery is fragile. It's looking better than it was, but it's still fragile. It's in its incipiency. Do you really want to
do
take
it sometime? It's almost a regressive. It hurts the people that you're trying to help probably more than it benefits wealthy people more than poor people, right? And there's a lot of countries that don't have. You got to do it sometime.
But there's the AMT. The AMT takes that away, right? Now the AMT is in place, and the AMT basically, if you're a wealthier person and if you have excessive deductions, whatever they are, it just at some point takes them away and throws them away.
But I wouldn't argue that the current tax code is a good thing. I think if you can zero it out and start from scratch, That would be a much better way.
And by
to
wealthy,
Right.
you mean if you make like $70,000 a year.
Maybe 20.
There's
Yeah,
there's
exactly.
no simple answer of how to obviously solve the tax problem. So ultimately, you have to simplify the tax code, which is what they're trying to do by changing the deductions. But I would agree. I don't think that right now makes sense to change the mortgage tax deduction. I truly don't think they'll do it either.
But you know what? You could make a decision that you are going to grandfather it out over the next
You could
5 to
phase
10
it
years,
out, yeah.
12 years. I think that's what they did in Britain when they got rid of it. They phased it out over a series of years. You got to make the decision at some point that this is going to be something we are no longer paying for in the future.
And then if people are forward-looking, they
Right.
could potentially plan.
It evens out over time, as you said. But for the first year, a higher dividend collection rate may already be offset by everybody moving it forward.
Right.
And whenever you look, the great, in the last couple of weeks, the great fact was over in Britain where they raised they went to 50% on millionaires, and they ended up getting half as much revenue because so many millionaires
But Joe,
moved out.
if you puzzle through, and I've been thinking about this, and I really can't figure it out, the macro effects of this dividend boom that we're going through right now. The first thing I figured out, I think, is that this is not advantageous to more than half of all shareholders. If you figure out that half of all shareholders are tax exempt and
Right.
they don't really care, okay?
Right.
That's one. The second is not all shareholders had a plan, you would assume, to sell that stock and get that dividend. They may have been long-term investors, so they don't benefit. They don't really
dividend
care.
anyway. You're thinking
Right?
capital gains.
Right. And the other thing is when it comes to capital gains, right?
Right.
Right. So they don't care. When you think about the problem of you've distributed the money to me, what do I do with it? How do I
Find something
How do
to
I
do.
invest it in a beneficial way? Do I spend it? Do I reinvest it? And is the idea that I then take this money, that the stock market adjusts lower because of the dividend payouts and the higher dividend, right? And I reinvest it at a lower rate? Is that how it's beneficial, Bob, when you think through the flow of money that will result from this?
Well,
Does the stock market adjust lower?
I'd rather have it and have nowhere to put it than not have it and have the government have
No,
it.
Joe, it's a serious investment quandary. Market
and the other
timing
thing is insiders are the ones we're worried about.
But that's what I'm talking about, right? Is this something that's done by insiders
certainly helps.
for insiders? Or is there what is the broader macro?
I think it helps everyone, but,
Well, we know it doesn't help half of the folks.
Well, because of the
tax,
because of the tax exempt or tax deferred stuff. I don't know.
What happens to the money, Bob?
Well, it's what always happens to money. I mean, we've got an environment where the interest rates are low,
Right.
and so if you reinvest it in a fixed income product, you're not going to make much return.
Lower, keep
On
it
the
in
other hand,
cash,
if the
not make
economy
much
picks up
return.
and you do that, you're going to have capital losses on bonds. I'm very concerned about the low interest rate in the bond market and the long period of time we've had bond yields this low. And in the stock market, you have to be careful because there could be a sorting out among stocks between high and low dividend stocks and how they perform when these guys go ex-dividend.
Why couldn't you invest it in GE after the money that you get and get a new 3% yield there?
Right. You could.
Or Comcast.
You could Comcast, right? You could.
Either one would be, I think, a good place.
Reinvest it back in whatever stock
But wait a
pays the
second.
dividend.
Wait a second. Wasn't I invested in company X before with that money? Didn't I have that money in there, and now they're giving it back to me? I've got to make
No, but now
a
you have
new
more
choice.
shares. Now you own a larger. Now you own a
stock.
larger part of the company.
Do
Now
I?
you-
No, because
Yeah, if you reinvest it and they buy more shares, you own a larger piece of the company.
no, but shouldn't it be? It should be equal, right? They've taken that cash out of the company. The stock price should
But
adjust
cash
lower.
is not the same as an ownership proportion in the company. Your thought would be that if you can buy more of the company, then you will have a larger share of a company
getting
that is more
bogged down
valuable
in
than
really
cash.
nuanced minutia here. I'm worried about you again.
I was just going to say,
and you
this
know
is-
who else you're bogging down? All of our viewers at home are now tired.
But no, it's exactly the problem they're going to have. They're
Our
going to get
viewers at
this
home are
big-
now going, Mika, shut up!
They're going to get this big check, right? The special dividend, and the issue becomes what to do with it.
I think also what you're potentially getting at is the idea of a financial wealth effect. Because we always talk about how household balance sheets matter a lot for consumer
Right.
spending. So most of the time we focus on housing assets because it's more of a permanent change in wealth, so consumers tend to spend out of that. But is there a financial wealth effect, and will that start to show up in consumer spending? And that's where I think people are a lot more mixed, right? Because you often think that the changes in financial wealth are more temporary, so you're not as inclined to spend out of it, which
Right.
means you're probably more inclined to invest.
So you are not running Yahoo, are you? Who's that? You're Michelle Meyer?
Michelle, yeah, that's the other
I did a
MM.
lot of background and research, and it was all for. How do you think it's
She
going?
has
at Yahoo?
blonde hair. It's
Right.
a
How
little
do you
bit
think it's going at Yahoo? Just, I've studied so much.
I think it's
all
great. I think
all right,
it's
never
great,
mind.
yeah.
Michelle Meyer. Michelle Meyer. Okay, I got it.